비트코인이 사상 처음 10만 달러 선을 뚫고 오르면서 그 어느 때보다 뜨거운 크립토 썸머를 맞고 있습니다. 암호화폐에 친화적인 트럼프 대통령의 당선과 큰손 기관 투자자들의 투자 확대, 그리고 트럼프 당선인이 불붙인 미국의 비트코인 전략 비축 가능성까지 지금의 강세 랠리를 막아설 재료가 없어 보일 정도입니다. 스탠다드 차타드, 펀드스트랩 등 글로벌 투자 은행들은 비트코인이 내년엔 20만 달러를 돌파할 것이란 전망도 속속 내놓고 있습니다. 보수적인 월스트리트에서 이런 비트코인의 강세를 누구보다 먼저 내다본 사람이 바로 D.A. 데이비슨의 테크 리서치 헤드 길 루리아입니다. 루리아는 11년 전인 2013년 12월 월스트리트 셀사이드에선 처음으로 비트코인 분석 리포트를 내고 당시 1000달러 미치였던 비트코인이 최대 100배, 즉 10만 달러까지 오를 수 있다고 내다봤습니다. 그 전망이 현실이 된 지금 그가 비트코인의 미래를 어떻게 보고 있는지 들어봤습니다. Could you elaborate on the key reasoning that led you to such conclusion at that time?
Yes, and to be fair, I think what I said at the time, this was very early on in the evolution of Bitcoin, that there's a really big divergence of outcomes. So there was a possibility that Bitcoin would be worth zero, and there was a possibility that with adoption, it was such a great idea and such a great technology that with adoption, given the fact that the supply of Bitcoin is fixed, it could go up in value 10 to 100 times. And lo and behold, it did. It's up 100 times since then. And what's happened is precisely that there's been very, very broad adoption of Bitcoin. It's hundreds of millions of people around the world own Bitcoin. It's probably the most broadly held asset of any type. And it's because people see different types of value in holding Bitcoin, whether it's trading, whether it's an uncorrelated assets class like digital gold. And also importantly, there's a lot of people that ideologically believe that Bitcoin should be all of money, that it's better money. And those people are continuing to drive adoption. And as that adoption spreads, because there's a fixed supply, that means higher asset prices.
You continuously said adoption. I earlier asked you that if this adoption means like a payment network technology, like in place of the money, or like something like an investment vehicle. As I heard you saying, it seems like you mean both.
Well, so I mean all of the above. And it's a great question because traditionally, when we think about adoption of a technology, we mean, are you using it to accomplish something? In the context of Bitcoin, that's really just a very small part of the equation. When we say adoption for Bitcoin, we mean adoption as an asset class, as an investment, as a trading vehicle, as an ideological tool to diversify away from institutions. All that means, did I take my government currency and swap it for Bitcoin? That's what we mean by adoption. As a payment network, as a medium of exchange, Bitcoin has fairly limited usability so far. It's probably, in terms of actually using the technology to accomplish an economic goal, money transfer is probably the one that's slightly ahead. But broadly speaking, when we say adoption, we mean, are people investing in it? Are people trading it? Are people holding it as a hedge against potential collapse of institutions? Right now, that's what we mean by it when we say adoption.
So when we go back to your report 2013, at that time you did place Bitcoin's most highest value as a payment network technology. How has it changed? Do you still view Bitcoin has like a possibility to be a payment method?
Yeah, absolutely. The thinking has evolved a lot in the last 11 years. And in fact, in the 15 years since Bitcoin was introduced. Original Bitcoin paper is peer-to-peer cash payment network, right? That when whoever Satoshi Nakamoto is wrote that white paper in 2009 or 2008 or 2009, they were talking about the fact that the reason Bitcoin would be superior is that you could do cross-border transactions for minimal fees, right? That was what the paper was about. What folks realized as Bitcoin grew was that it had these other specific use cases that had nothing to do with payments. Again, investment, trading, hedge. But if we were to talk about that big picture, that belief that Bitcoin could be all of money, if Bitcoin became all of money, then it would be used as this very efficient payment network. Then we could have transactions of all types at minimal transaction fees of all types. And the reason I use the term all of money is that everybody has to use it for it to be usable for these types of transactions, or so many people have to use it to get to a critical mass where we would start transacting in Bitcoin. Once we do, it'll be far more efficient than how we transact with government currency. But there has to be a much higher level of adoption by users, by governments, by companies for us to get to that point. We're not there yet. And I think about that in probability terms. So I would say, if you asked me today what the probability is that Bitcoin becomes all of money, in fact, what the probability is that's implied by the price of Bitcoin that it becomes all of money, I'll tell you that it's about 1% to 2%. So there's a 1% to 2% chance that at some point in the future, 10, 20, 50 years from now, we're using Bitcoin to pay for everything, to hold money, to transact globally. That's not a very big chance, but if you were to think about what it would take for Bitcoin to be all of money, given the fact that there's only 21 million Bitcoin that will ever be created, that would mean that each Bitcoin would be worth, at least in today's dollars, in today's US dollars, $5 million each. So if there's a 2% chance that that happens, that corresponds to a $100,000 price. So that's the probability. Now, if you asked me when I originally wrote the research report about Bitcoin 2013, how high I think that chance was, I would have probably said 0.001%, right? So I think the probability has gone up significantly. Saying that Bitcoin was to become all of money is 1% to 2%. That's actually pretty aggressive. There's people that believe that it's a lot higher than that, and they can believe that, but the highest likelihood is that it doesn't, that we continue to use government currency from now on, in which case Bitcoin will only have niche applications. But the real promise and excitement around Bitcoin is the potential for it to get to those very ambitious goals.
Comparing from 2013, the probability went up significantly. So how do you view from now on? Does the 1% to 2% probability do you think it'll go up from now on?
Well, things have to happen incrementally for that to happen. So for now, there's one country that's embraced Bitcoin into part of its treasury management, and that's El Salvador. And they've had tremendous success. They've created incredible wealth for their government, which has paid for very significant progress within El Salvador. And if other governments were to go down that path, that would increase the likelihood. At some point, and I don't believe this is the case anymore, at some point Tesla held Bitcoin in treasury. And if more companies do that, that would increase that probability. And part of the reason there's excitement right now, part of the reason we hit this $100,000 milestone is this conversation in the US of President Trump talking about a strategic reserve of Bitcoin. Obviously, if the United States government was to embrace Bitcoin to that extent, that would have very broad implications, and many other governments may then jump on board, and that would increase the probability very significantly. Having said that, the likelihood of that happening is probably not that high.
So even though Trump 2.0 begins next year, even though the Republicans have already made a bill to buy Bitcoin with make a reserve, a U.S. reserve, you think the realistic probability is probably low?
I do. I think that there's going to be a lot of good things to crypto that happen from this administration. There's a lot of pro-crypto people that are involved in this administration, the incoming administration. But I think that's more likely to translate to regulation, to clear, friendly regulation that allows the whole sector to thrive. There's still a big step from that to the United States government buying Bitcoin. I don't know the reasoning for having a strategic Bitcoin reserve, so I'm not sure how far that would get. I think Congress is going to have some other priorities when it convenes next year.
Also, like the Fed Chair Powell, he also said that it can't be replacement for dollar. It can be in competition with gold, which I think became a big boost for Bitcoin again, like a digital gold. I think the US will be very hesitant because it can maybe threaten the US dollar's position. Is that correct?
That's exactly right. That's why I say that of all the governments that are likely to embrace Bitcoin, actually the US is probably the one that has the least reason to do so, because the global hegemony of the US dollar has translated to tremendous economic power for the United States in terms of our ability to control monetary policy and promote exports and promote economic activity outside the US. So the US actually has a disincentive to move the world to a world where everybody uses Bitcoin, which is, again, why I hesitate to think that we're going to be the first country to, or the second country to embrace it that broadly. But to your point about Chairman Powell, a couple of points on that. One is that digital gold is what, when I say that it's an investment in an uncorrelated asset, that's the main usage of Bitcoin, that's exactly what I mean. I mean that for decades, if you didn't believe in your government currency and you wanted to hold your assets elsewhere in an asset that's not correlated to your government currency, you would buy gold. For decades, that was really the only way to go. Bitcoin is better than gold at accomplishing that goal in every regard, because it's more liquid, it's more available, you can trade it easily, you can actually have the ownership of it. So, and ownership is much more convenient, right? If I want to own a lot of gold, I actually have to carry a big, heavy pile of gold. Where with Bitcoin, all I need is the 32-digit hexadecimal private key, and I can own any amount of Bitcoin with that 32-digit hexadecimal key. Also, Bitcoin has finite supply, gold does not. Bitcoin is a better uncorrelated asset to hold if you don't believe in your government currency or the ability of your government currency to hold value.
You keep saying that it's uncorrelated, but in fact, 5 years ago, the Nasdaq and Bitcoin was very much correlated. So many people were just saying that it's another risk asset. Of course, the correlation seems to be more and more coming down, but some still say that loosely they might, from now on, just go as the Nasdaq flows. So what do you think about this correlation with the risk assets?
It's a great point, and it's an important subtlety. It is a risk asset, and therefore when there is excess liquidity, for instance, when we had zero interest rate policy, then excess liquidity goes to a lot of risk assets, and Bitcoin and crypto are a risk asset, right? In fact, they're highly, highly, highly risky. So absolutely they fit the criteria of a risky asset class. And in periods where you have big liquidity inflows or big liquidity outflows, in those periods, there is correlation in the asset price. I'll concede that. If you think about the bigger picture, though, when we talk about what actually drives the value of Bitcoin, I get back to adoption. How many people are willing to take their dollars and put it in Bitcoin? From a fundamental basis, that's entirely different than what drives the value of stocks, bonds, real estates, or the value of a government currency. Stocks are driven by economic activity, growth, profitability, by management, a whole series of issues. Real estate is driven by population growth, by regulation, a whole series of issues there. Government currency is driven by government deficits, economic activity, again, by population growth. Those fundamental drivers of equities, bonds, real estate, and currency, and government currency have nothing to do with adoption. Bitcoin is driven by adoption. So the fundamental drivers are entirely different, which makes it inherently uncorrelated. Again, in periods of great liquidity or pulling out of great liquidity, they look correlated, because that's when the movement happens. But long-term value, there's no correlation whatsoever, because the factors that drive the value of these assets are completely different. What is the value of Bitcoin? Why does it have value? And the answer is simple. Anything that has scarcity and utility has value. Bitcoin has scarcity. There will only be 21 million. There's nothing that can change that. And it has utility. And we've talked about some of the types of utility, but for any individual person that's buying Bitcoin, it could be any one of those things. And if bonds, stocks, and real estate are actually highly correlated these days, and I want to protect my portfolio, I'm going to buy something that's uncorrelated. And then let's talk about for a second about ideological reasons. If you remember, again, from that origins of Bitcoin, When the software was released, it was released with a reference to the bailout of banks. And this has always had a cultural aspect to it of distrust in institutions. A lot of the people that buy into Bitcoin or buy Bitcoin are doing so because they do not have trust in institutions. They don't trust their government. They don't trust their banks. They don't trust their courts. They don't trust anybody to hold their money. They want to hold their own money. So these are all different uses, utilities that people get from Bitcoin. So it's got scarcity, it's got utility. That's what bestows value upon Bitcoin.
Also, you said it is a very risky asset and it does have a very high volatility. So now we are above $100,000, but as we also already saw in history that it does happen to fall very quickly when it starts to. What do you think about in the future?
I think it's going to do well, but let me couch it this way. Nobody should ever invest in crypto more than they're willing to lose. Any crypto, including Bitcoin, is a highly speculative asset. If you were to think about the trade-off between risk and reward, and at the very basic, at the origin of the graph, you have United States Treasuries, right? Those are the safest asset you can own for a variety of reasons. Real estate, slightly more risky, you get slightly higher returns. Bonds, slightly more risky, you get slightly higher returns. Stocks, higher risk, higher return. If you've noticed where my finger's going, I'm going to go off the screen over here to put crypto. Very high opportunity for reward, extraordinarily high level of risk. And so never invest more than you're willing to lose. Having said that, just like I thought up until now that there's a potential for crypto to do better and go higher, I think that's still the case because of everything we just talked about. Adoption will go up from here. It's likely, in my opinion, adoption will go up. And if adoption goes up, the asset prices could go up as well. It's a breakthrough in mathematics. It's a breakthrough in economics. It's a breakthrough in finance. It's a breakthrough in computer science. And I think what we've learned over time is that it's a cultural breakthrough. Because for the first time in humanity, we have this ability to decentralize power, decentralize control over resources.
You said about utilities. There are many more effective transaction network technologies other than Bitcoin. Some say that Bitcoin is much slower than other crypto networks, and it lacks also the smart contracts capabilities like the Ether.
I tried to use the term crypto assets broadly because I do think there's a lot of innovation that's happening beyond Bitcoin. We talked at length now about what the possibilities for Bitcoin are, which includes, again, eventually a payment network. But once you get into trying to decentralize technology more broadly, Bitcoin isn't necessarily the best technology for doing that. At the very least, Ethereum is potentially a technology that could facilitate the decentralizing of a lot of other types of technology and a lot of other types of financial transactions. And it was built for that purpose by the Ethereum team that started, by the way, right around then, in 2014. I had the good fortune of bumping into Vitalik Buterin at a conference in 2014 when he was just talking about it as an idea that he had. It didn't even exist back then, and it made a lot of sense. He explained to me that just making the each transaction on a blockchain Turing complete would open up a whole new set of possibilities. And he was right. During the last crypto summer in 2021, there was a lot of activity around building financial tools through decentralized technology. And Ethereum is a very good way of doing that. There are other crypto assets that may be able to do it, but by and large, Ethereum is the most important one. It allows you to move transactions that embed logic, that embed software code into them and allow much more complicated financial transactions, contracts, and what we now use banks for or real estate agencies. We can do that in a decentralized way, which has the potential of lowering the cost of having financial transactions very, very dramatically. What I would expect now with a new administration is that we're going to get a much more clear framework for regulations, which will allow more innovation to happen. And again, I would expect much of that innovation to happen on other types of crypto assets, on other types of blockchains and other type of blockchain technology. And again, first and foremost, the probably the best position, at least at this point, is still Ethereum.
If you have to put a price on a target price for Bitcoin, what would your price target be?
I don't have a price target on Bitcoin, and since I'm in a heavily regulated industry, I'm not going to start now. But I'll say what I said 11 years ago, which is Bitcoin could either go to 0 or it could go to 5 million or anywhere in the middle. But I think I've already said that I would expect that adoption to continue, which means it should, over time, with a lot of ups and downs, be able to go to higher levels than it is right now.
I was curious about how you think about the Bitcoin proxy stocks like MicroStrategy and maybe Coinbase.
They're issuing a variety of securities in order to buy Bitcoin. That's financial engineering. So again, buyer beware. You're buying a very complex derivative instrument on Bitcoin when you buy MicroStrategy. If you understand the derivative, what happens in various scenarios, and if you have a good understanding of that and you believe that that's the financial profile you're looking for, that's fine. But you may be better off doing something more straightforward, like a leveraged Bitcoin bet, because MicroStrategy is trading at a very high premium even to its value as a leveraged Bitcoin bet. So again, buyer beware. That is not necessarily the best way to invest in Bitcoin. Not to mention, again, you don't actually own the Bitcoin. You're owning an ownership stake in an entity that has a very complex balance sheet that does own some Bitcoin. If you don't understand exactly what they're doing, I'd stay away. Coinbase is a whole different story. Coinbase is more of an indirect way to invest in the growth of the entire crypto asset space, because Coinbase trades a lot more than Bitcoin. It trades Ethereum and then a long tail of other crypto assets, and it benefits from any increased activity in crypto, whether it's the trading, the ownership, the stable coin usage. So they're involved in a lot of different markets. But again, valuation is quite high right now. It's embedding very high expectations. So I would consider that could mean that it's going to be a very volatile stock. And again, you have to zoom out and remember what you pointed out earlier, which is Bitcoin has gone through multiple waves where it goes up 20 times and then it declines 80%, and then goes up another 20 times and then it declines 80%. And the summers are shorter than the winters. The summers are usually around a year. The winters are 2, 3, 4 years. And so for a company that's operating in crypto, during the summer, it looks great. During the winter, the activity is just a lot lower. So you have to keep that in mind and zoom out and think about, am I buying this for the next few months, or am I buying it for the next 10 years? And that changes your perspective on a stock like Coinbase.
Koreans are very interested in Bitcoin, and they really, I think, adopt it much faster than the rest of the world. But the regulation is very strict and very unclear that in Korea, we can't trade Bitcoin spot ETFs. We can only trade Bitcoin future ETFs. Even if I want to buy IBIT, I can't. That's why so many are trading MicroStrategy leverage ETFs.
Government policy needs to be more accommodating and thoughtful. We do want to protect consumers. That is very important. We also don't want to protect consumers from making money. And what many of these governments has done is prevent many of their citizens from increasing their wealth by participating in this creation of a new asset class. And that's unfortunate that only the tech savvy people have been participating, or people in certain countries where there's less limitations, and people in countries where there's been a more parochial approach of being a nanny state and protecting people. Those people are lost. And
that is so true. You're also a very renowned tech analyst, so I have to ask you about tech stocks, of course. Just to start broadly, do you have a prediction for the US stock market for next year? And tech stocks, maybe?
I can tell you some thoughts that I have. I don't know that, again, I have a price target for the S&P 500, but what I can say is that the new administration brings a couple of very important new factors for considering the growth of the overall market, and especially within technology. The first is that we can have expectations for lower taxes, or at least taxes not going up. That's very important because it means that we're probably underestimating earnings for many of our companies if taxes do go down or moderate from here. So that's very important. The second factor is we're much more likely to have more mergers and acquisitions next year. The new head of the Federal Trade Commission that was announced today is far more likely than his predecessor to allowing mergers and acquisitions. Not by the largest companies, not by that 5 or 6 largest companies, but by everybody else. And those two things are very good for the market. The multiple that this S&P 500 is trading at right now is very high. It's about 23 times, which is 1 or 2 standard deviations above normal. So there's 2 ways to look at it. Either one, to expect it to revert to the mean, which does happen over time. And the other way to look at it is that maybe we're not forecasting enough earnings, is that maybe lower taxes, increased economic activity, lower interest rates will translate to higher earnings than are currently expected, which by definition would mean that the multiple is not quite that high. I tend to think that the truth is somewhere in the middle, is that the multiple's high, it probably can't stay this high, but it's not as high as it seems because earnings have a pretty good chance of doing better next year than currently anticipated because of a strengthening economy, especially in the United States. So that's broadly speaking. Then within technology, how AI gets deployed is a very important factor, especially for the largest companies. Right now, you have Microsoft, Meta, Amazon, Google investing very, very heavily in data centers, which is very expensive, but they're currently trying to ramp up revenue there. That benefits NVIDIA greatly. If those companies were to slow down investment because it's gotten to be at such a steep level, that wouldn't be as good for NVIDIA, but it would be good for them if they could keep growing with lower levels of investment. And that's the main thing to look for next year is the investment in that great data center build out continuing, at what pace, and is it getting good return and good results through new applications of AI that translate to real businesses. So in terms of outlook, those are the things we're thinking about for next year.
To your point, that I think that right now the market sentiment is that now we're witnessing the broadening of the rally outside of Magnificent Seven. Of course, NVIDIA I think it'll grow, but many are maybe thinking that the pace of growth, it has to come down because it was literally magnificent. So I think many are thinking it can't keep up like this. So maybe we are looking to like maybe a shift from AI chips and hardware to software applications or a real use like B2C or something. Do you see this kind of rotation we're seeing right now is going to go through next year?
That does seem like the likelihood. So to your point, NVIDIA can't possibly grow at these rates, mostly because it just doubled in the most recent quarters. It's not going to double again next year. It will grow, but not at the same rates. And broadly speaking, over the last couple of years, those Magnificent Six or Magnificent Seven have had much more earnings growth. Next year, the growth rates should converge. So those biggest companies will still grow earnings, just not as fast as they did. And to your point, we're more likely to get growth in software companies like Snowflake, Datadog, companies that facilitate the growth of AI are more likely to do well or to do better next year, especially compared to those magnificent mega caps.
Do you see broadening out of this tech sector to maybe a defensive sector, whatever that is? Or do you see a more broad rotation?
Not necessarily, not quite yet. So the technologies brought about by AI will make everybody more productive. They are going to automate a lot of tasks that we currently do manually. But that's going to take many years to play out, 5, 10, 20 years before we get a significant amount of those productivity gains that would benefit beyond technology. So right now, really, we're just building the tools and starting to sell them, which accrues to the technology companies.
Do you have a top investment pick idea for next year?
Of the Magnificent Seven, Amazon and Meta are preferred because, again, providing tools to other companies to build AI is going to be the most important thing that happens next year. Amazon Web Services is the biggest hyperscaler, and it will become the biggest provider of AI tools. So that puts them in an important position. Meta is taking a very smart approach of making their frontier foundation large language models open source. We expect their Llama model to become the leading model that's being implemented, and they will benefit from that at some point, maybe commercially based on providing access to the model. But what they're really benefiting from is that the better the Llama model gets, the better their product gets. They are using these models to sell more ads, to sell better ads, and to charge more for it. So the benefits of the development of AI and being the open source leader are translating to benefits in their business. So of the mega caps, those are our two favorites. But again, there's a lot of small mid caps that'll benefit as well. I mentioned Snowflake, Datadog, JFrog, Dynatrace, and companies like that that should benefit just from the overall growth of usage of AI, experimentation of AI, and building new tools using AI.
Lastly, the Korean investors are very much heavily invested and also very interested in semi-stocks, of course, NVIDIA, and Tesla and Palantir. Maybe could you share your brief outlook on these three stocks?
So Palantir is doing phenomenally well. They were at the right place at the right time in that they have a tremendous amount of expertise and professional services around implementing complex data structures and analytical capabilities. And then they have the ability to get their customers' value very rapidly based on those. And they were very uniquely positioned to do that, which is why they're seeing accelerated growth in the commercial side. And then on the government side, they're very much aligned with where the next administration is headed, which is in becoming smarter and more oriented towards modern warfare as opposed to last century's warfare. And that benefits Palantir greatly because they have the best dual source software and they have already a tremendous success with the government. And so they're very well positioned. Having said that, the stock is extraordinarily expensive right now. It's historically expensive. And so that's always risky because any misstep or if anything but perfection could cause a lot of volatility in a stock that's that expensive. That's the thought on Palantir. NVIDIA, we've already talked about. At some point, we're going to have enough data centers. And when we do, NVIDIA won't, not only will it not grow as fast, it'll start declining. And so I would just be very wary of that. It may not happen next year, but if it doesn't, it'll happen the year after that. We're going to get to a point where NVIDIA doesn't just not grow as fast, but it may start declining, in which case the stock has a lot of downside. And then on Tesla, that's always a fun one because Tesla never trades at what it should from a fundamental basis. It really has more to do with how excited we are about whatever Elon's doing next. The car company, Tesla, the company that makes automobiles, is worth a lot less than the stock is implying. So really, most of the value in Tesla is excitement about what they're going to do next. Robo-taxis. And these days, a lot of the excitement's about the robots, the humanoid robots, Optimus, because that is an immense market once it happens. If those come to a price point, if we can have a robot in our house that's folding laundry and doing dishes, and then the price point somehow gets under $100,000, there will be a lot of people that buy that product. It is going to be an immense market. And if you believe that Tesla is ahead of the curve, which it looks like they are, there's got to be a lot of value in that. Ascribing value to a market that doesn't exist with a product that's decades away from being ready for prime time, that's hard to do, but that's what investors are doing.
I think the Optimus, they've proven very fast development. So I thought maybe in 2 or 3 years, of course not in households, but maybe industrial use, I thought. So maybe it's too early to think like this.
In an industrial use where you have very strict safety considerations and the possible value could be very high, we may start seeing more and more over the next 2 to 3 years. But for that broad market of a robot in every home, the robots have to be so incredibly safe that they would never, in any circumstance, hurt a human. That would require so much regulation, so much testing, so much time that we are very far away from that. Again, think about if you put a robot in a house and it hurts a baby, even if it was the baby's fault, nobody's going to care. And that is unacceptable. And these robots have to be so unbelievably safe which is going to require many years of testing and experimentation. We're likely to get there. We can see the path, but that part seems pretty far away. In an industrial use, absolutely. We have different types of safety considerations, and we can derive a lot of value from having a robot instead of a human. That could pay for a robot. But let's also not forget that those Optimus robots we saw in the demo are millions of dollars each. Even in industrial sense, it would have to do a lot to justify the current price point from an economic perspective.
Thank you so much for your insight.
I appreciate you having me, and would love to chat in the future if you'd like.
Of course, that'll be so nice. Thank you so much.